What is going on, YouTube Nation? This is Darth Dividend, and if you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I made some purchases on some Global X ETFs, specifically Global X Russell 2000 Covered Call ETF. So covered calls are usually a buy or right strategy, and this one basically is a very nice stock for passive income, which distributes a 12.01% distribution yield. It distributes monthly. I just added that in my E-Trade dividend portfolio, and it's mostly with high income. So a lot of you guys were asking me, like, what is it really about? Why would I get RYLD? And RYLD mostly distributes a dividend. So this is the nice thing about it, and I will show you some information about it. Okay, so its net asset value is $21.65. Now again, this is one that won't really beat the S&P or really dominate the S&P. It's more for income. So everybody asks, why would you get qyld? Why would you get RYLD? It's more for income. Okay, it's not on M1 Finance, but it is on E-Trade. So year to date, it's down 11.44%. Well, that's kind of a given because if you think about it, the bug hit. Okay, so that's one thing that's going on. It's really its top holdings, pretty much. Its net assets are the Vanguard Russell 2000 ETF. So it mostly is, again, focused on the income. Now, the Vanguard Russell 2000 ETF, that's more of a stock that you should have in a traditional IRA and or a Roth IRA, because it only distributes like a 1% dividend. So that's one thing that's really interesting with that. Let me show you the dividend history real quick. I know I'm going to be very quick on this, but let me show you the dividend history. So it's kind of a new stock if you look at it, and with covered calls, sometimes you got to be careful. I've read in a lot of forums about people losing a lot of money doing covered calls, but you can make a significant amount of money. But I'm more focused on the income standpoint and just reinvesting my dividends. So RYLD is a really good stock to just reinvest the dividends and make passive income, because one of my goals is to make $1,000 to $3,000 a month in my monthly dividends. So if I can get $100 a month just on these guys in the future, I'm in. That way I can reinvest more shares and I can just go from there. So starting in 2019, 23 cents, 22. So it's kind of like a little bit of a scatter bomb. So, it's not the best thing. I wouldn't consider it a growth stock. I wouldn't consider it something to put in a Roth IRA or traditional IRA, unless if you have kind of a strategy that I have in my M1 Finance dividend portfolio, that you're going to have these monthly dividend stocks distribute more dividends. That way you can start buying more stocks and buying more fractional shares. So that's one of the reasons why I have qyld in my dividend portfolio. Let me just show you how it's done against the S&P real quick. So it's kind of a new stock, and it's down. Here's the S&P. I mean, the S&P's in the past 5 years have done really well. It's not going to beat the S&P. So if you're trying to think, beat the S&P or buy stocks to beat the S&P, this is not your go-to stock. This is more of an income stock. So that's one thing I want to get across, because I did one on Global X Covered Call ETF or qyld, and you have to realize that these are just for income. Okay, usually ones that distribute high yields that are safe and stable. You know what? I need to jump to the usually how much it costs too, because you need to be careful with the expense ratio. So the gross expense ratio is 7.78%, and the net expense ratio is 0.60%. Not bad. The Vanguard ones are a little bit cheaper, with the expense ratios. But this is for monthly dividends. Your goal is to make monthly dividends from this and just reinvest. Honestly, do this just for an income. Again, I'm not a financial advisor, but focus more on the income standpoint when you buy stocks like these, not for a traditional or Roth IRA. Like I said, the only time I would do that is put it in my M1 Finance dividend portfolio where I know that, buying more shares of these will help contribute to buying more stocks in my other quarterly dividend stocks. So this is kind of a income thing with qyld so that I can buy more shares. So that's kind of my goal with these covered call ETFs that are mostly income. So let me know if you have any questions. I have about 6 shares in E-Trade. I'll probably post a E-Trade update eventually, but right now I'm just telling you I have about 6 shares of RYLD, and I'll probably get a few more in, I want to get to at least 15 and then leave them alone, let them reinvest, and then go from there. Because I know the compound interest will kick in, and then I'll just start buying more shares and buying more shares when the compound interest kicks in. Kind of like what's going on with Realty Income and Main Street Capital, my M1 Finance dividend portfolio. Let me know if you have any questions. That's pretty much it. With RYLD, you got to be understandable. You have to understand that these are just for income. So I wouldn't do this and buy and wait until it goes up and then sell. This is not going to go. It's just going to be kind of like this. It's going to be stagnant. You're not going to really get that much if you buy and sell unless you throw like $10,000 in. You're lucky it goes up like $1 or $2. So that's pretty much it. I like the stock. I'm going to continue to reinvest, and let me know what you think of RYLD. So again, if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend, and again, this only has 2 holdings. I mean, look, 2 holdings, pretty much. So nothing much. It just follows the Vanguard Russell 2000 ETF, and again, the Russell 2000 ETF is a good one for your Roth IRA or traditional IRA, especially on your M1 Finance portfolio. If you have a traditional IRA, Roth IRA, because that's going to go up. It's going to go up, up, up. And it's not going back down, I can tell you that. So thank you again, and have a good one.